It's 5 o'clock p.m. here in Seoul on New Year's Eve. Thanks for joining us on this special edition of Arirang News. I'm Devin Whiting. The markets in Korea had their last trading day of the year yesterday. There's still one more session to go on Wall Street, but this afternoon we're going to take a look back at the markets, the global economy, and the Korean economy this year, and talk also about what the new year has in store. To shed light on all of this, I'm joined here in the studio today by Dr. Kim Sei-wan, Professor of Economics at Ewha Womans Univerity. Professor Kim, great to have you back.
Good afternoon, Devin.
Well, every major economy in the world this year is expected to have contracted, with the exception of China. Governments are going into debt to support their people, to prop up their economies, of course, to fight the virus. So let's start there. Give us a big picture of the global economy and our specific situation here in Korea.
Global economy is experiencing unprecedented shock from coronavirus pandemic, and Korean economy is not an exception because Korea is one of the most foreign-dependent countries in the whole world. Basically, coronavirus pandemic forces people to stay away from each other. So almost every face-to-face based businesses, which is service industry, is the most affected. So that means developed countries where the service industry covers the major part of the whole economy, like more than 70% in the U.S. and more than 60% in Korea, are more affected than that of the developing countries. According to IMF estimation, global economy shrinks by 4.4% this year, 2020, due to the pandemic shock. And last year's global economic growth was 2.8%. So that means in terms of the economic growth rate, there was a more than 7% decrease in a single year. And that huge number represents the economic pain of the global economy. And this number is much larger than that of 2008's global economic crisis.
Yeah, and looking at two main players in this, China and the United States, they've experienced this pandemic differently. They've had different roles in the pandemic, and their response to the pandemic has been different. And going into the new year, their relationship will continue to be a focal point, not least because of a new administration under Joe Biden coming into power in the U.S. So tell us, how do you think the new administration will approach China and vice versa?
In retrospect, under President Trump's administration, he just walked out of the multilateral contracts between countries like TPP, Trans-Pacific Partnership. And the new president, Mr. Biden, will try to recover this multilateral free trade theme of the international trade. And Mr. Biden is, however, is much expected to press Beijing because he does not want China to write down the rule of international trade. Beijing also expect, I think, they will have more tough time with Mr. Biden because he has more complicated and well-organized team for the negotiation and with China and in every respect.
And now South Korea finds itself, of course, stuck in the middle between, on the one hand, its biggest trading partner and then its closest essential ally on the other hand. So tell us, how is South Korea going to navigate this going forward?
Regarding U.S. China trade conflicts, there won't be big changes of Korean exports environment. U.S. will continue previous sanctions on China in terms of the tariffs and currency manipulating country penalties and so on. So it means that, like before, Korea's indirect export to U.S. Through China will be kind of constrained under President Biden's administration. But there is a possibility that U.S., either U.S. or China will demand Korea to take one side only between the two countries, like U.S. bans the use of Huawei parts in Korean export products like smartphones and TV sets. This is not something a single company like Samsung Electronics or LG Electronics can take care of. So if that really happens, Korean government should be providing clear direction on these problems.
Yeah, there has been a great deal of pressure on many U.S. allies in that regard. Now, one thing that's recovered to pre-pandemic levels has been South Korea's exports. Key items like displays, memory chips are up. What do you see happening with exports in the new year? And are there any particular risks other than the obvious ones that we should be watching?
Well, in the middle of a very difficult situation under COVID pandemic, one thing fortunate was global trading decreased in the early stage of the pandemic, but that quickly recovered. This is something different from that of 2008's global economic crisis. In 2008, global trading decreased by 20%. That situation continues for more than 5 years. So from August, totally unexpectedly, Chinese export increased by 9%. And after that, South Korea's export increased over 5% from September. So that increasing momentum is maintained until the end of this year. But it is, there are lots of uncertainties still in Korea's export increase because still coronavirus pandemic is resurging in Korea and in other major trading partners of South Korea. And Korean won is kind of still appreciating against US dollars. That's going to be another negative factor to Korean export increase.
Yes, and at some point, eventually, people have to start moving between countries as well. But now, let's talk about South Korea domestically. The government's budget for 2021 is over $500 billion. Over $500 billion. They're aiming to front load 63% of that spending in the first half of the year. So what are the key parts of the budget and what do you say about its sheer size?
Next year's government budget, 558 trillion won, is focused on intensifying supports on maintaining employment and stimulating domestic small businesses. Of course, it is one of the largest super budget in Korean history, but it is inevitable to have much larger budget to stimulate domestic economy and support small businesses and self-employers. Particularly, government has decided to roll out 9.3 trillion won size, the third COVID relief funds last week. And actually, the recipient can get cash from government from early January, which is from next week. So as the situation of small businesses and self-employers quickly worsening, government's decision on implementing COVID relief fund, rolling out COVID relief funds was appropriate and timely decision, I believe.
Yeah, we'll have to talk about a little bit more about the small businesses in just a minute. But as the virus spreads, it seems that the government just has to go further and further into debt. And a lot of people are saying that while the virus has to be fought, this is a concern for the state's fiscal soundness. What do you say, Professor?
Actually, as you talked about, there is a increasing concern on fiscal health of the South Korean government. One of the strongest point of the Korean economy and government is low debt rate of South Korean government, which is much below 40% in previous year, 2019. In other countries like in Japan and United States, government debt to GDP ratio exceed 100%. But due to pandemic shock and government fiscal responses on these pandemic shocks, government has spent a lot of money along with 4 times of supplementary budget in this year, amounts to 67 trillion won. So in the next year, South Korean government debt to GDP ratio will be increased up to 47%, which is the highest level in history. And in a single year, that is increasing over 8%. Of course, that is the fastest pace of the government debt increase in Korean history. So one thing really worried about this situation is foreign sovereign rating companies like S&P, Moody's, and Fitch are watching Korean government debt increase very closely. And there is a possibility if Korean government debt increase like this, they can lower the sovereign ratings in the next year or after 2 years. Then that leads to outflow of the Korean outflow of the money from Korean market to foreign countries and worsening reputation of the Korean economy.
Indeed, that could be a concern. Now, this year in stocks, the big crash in March was seen as an opportunity by a lot of retail investors to get into the market, perhaps for the first time. And now we see here at the end of the year the Kospi closed at an all-time high. So some are saying these gains could continue into 2021. What's your view, Professor?
Well, today was the last day of the trading for stock market in Korea, and Kospi market is closed with 2,873 for today, which is highest level in Korean history. I think this year's stock market will be gone down as the victory of small domestic individual investors. Domestic individual investors net purchase, the gap between buy and sell, amounts to 63 trillion won, which is, of course, the largest purchase in history. And another very impressive point is that even though a real sector of the economy is worsening with negative GDP growth, the stock market and real estate market boomed, which is unprecedented situation in Korean history. So theoretically, stock price of today reflects future recovery of the economy. So if the Korean economy does not recover, for example, in the first half of the next year, there could be larger gap between stock price and real economic activities. That makes bubbles, and that bubbles in the stock market can burst anytime, and that's going to be another risk factor of the Korean economy if stock market booms until next year.
It's being raised as a social concern, too. And now another asset class that's done well this year have been the so-called safe haven assets, and that would include gold. It's been a very good year for gold, though it's down a bit from its high, which was above $2,000. It's now around $1,900 or so. And Bitcoin is now above the highs that we saw 3 years ago. Where do you see these safe haven assets going?
Even though there was a gold price increase in a short period in the middle of November, there was solid demands for safe assets after outbreak of pandemic. So stronger demands for safe assets or safe havens were reflected in higher prices of gold and Bitcoins. Prices in gold in next year really depends on the path of coronavirus pandemic. So if coronavirus situation stabilized in the middle of next year, I think the demands for gold will be weakened, and therefore price of the gold will be decreased in a larger amount. In the case of Bitcoin, actually, against the concept of the investors in Bitcoin, it can't be a safe asset because the price of the Bitcoin is pretty volatile, more volatile than that of the stock prices. And it is not yet accepted as a medium of exchange or general means of payments like money in any country. So we have to pay more attention and be careful on Bitcoin investment.
That's a great point, and it will be interesting to see how long this Bitcoin rally lasts. Professor, let's take a closer look at some of the policies that are going to take effect in the new year.